So what are two insanely simple and even profitable moving averages strategy, right, for beginners and even pros? Hey guys, Joby here, top tier Mizio and trader in Philip Securities, and in this video we'll be talking about a moving average strategy. How do we use moving averages when we are looking at the stock market? Whether is it to guide us in terms of entry and exit, or whether is it just to guide us in terms of the trend, right? Whether should we think about buying, or should we think about getting out, or should we think about doing nothing, right? So how does moving average actually fit into the bigger picture, right? So this is what will be covered. So first thing first, we'll look at a diagram right here. I'll just quickly explain to you what is a moving average, how do we actually pull out the line. But in fact, we can actually pull out this moving average line in any single chart, and that's what I do too. But the key here is that how do we interpret these lines, right, after pulling them out on the chart. I'll come to that in a bit, right? So we look at some case studies as well at the end. So I hope you find this video useful, and if you can give me a like as well, hit the like button. That would be really helpful, and that will help out the channel. And of course, smash the subscribe button as well, so that you will not miss out on videos like this. All right, so let's dive into this moving average strategy right now on this diagram. So I've drawn these prices right now. That's pretty much how a stock will go, right, in terms of it moving down, 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 and then potentially starting to turn up, and then eventually turning up. This is what we call a bit of a reversal from a downtrend to an uptrend, right? So most of the time, right, people will be thinking about, buying because it is cheap, right? So people tend to buy in a downtrend. Why? Because we like cheap things, right? We like cheap things. We like to buy things at a discount. We like to go to a bargain store, and we want to grab things cheap. So we don't want to do that, all right, in the stock market. That can be really dangerous, especially if you buy a stock and it goes down and it goes down, and then you buy and it goes down. That's where you get a lot of your capital, a lot of your money stuck there. I think some of you might have experienced situations like this, right? So don't do that, right? You only want to think about buying when there are some signs of a reversal, or at least the trend is up, right? But not in a downtrend like this phase right over here. This is what we call a downtrend phase. Look at this, right? So this is what we call, forming lower highs, lower lows. It just goes lower, it breaks the support and goes low. So we try not to buy in phases like this. Of course, in phases like this, when it's moving down, sometimes you might see a couple of short-term rebounds, and then like rebound a bit, and then sellers comes back and push it even lower. So if you want to catch that short-term move up, you can do that, but make sure you have a plan, because the trend is generally down. So we try not to go against the trend. We want to think about going with the trend. I mean, it's harder to go wrong when you are with the trend than against it. Does it make sense? All right. So in this case, in a downtrend, you can potentially think about maybe taking like short positions to like shorts. You can use like CFD, contract for difference, to take shorts to ride the downtrend and profit from the downside. Does it make sense? All right. So that is pretty much for the downtrend. And as I say, right, we try to get in on trend reversal, all right, if you're talking about buying. And in fact, more than 70 to 80% of people always think about buying. So if that's the case, great, it's fine as well. If you're looking at just buying and buying, then you want to focus on areas or consolidation periods whereby we found some stability, like right over here. All right, this is what we call a bit of a consolidation. This is what we call a bit of an uptrend, right, as it turns from a kind of like a down to sideways, and then eventually moving up. And that's where you can start to think about buying, especially if you're those who just like to buy and buy and buy stocks. Well, you want to focus on these two areas right over here, number 1 and number 2. All right, so let me just remove this again, all right, and explain to you how does moving average actually fit in. So this is pretty much how a stock will go, right, from down to up. Now we're just looking at this. Of course, it goes from up to down as well. That will be another video. But essentially, this is how a stock price movement will be, right? It will not just go up and down within like a few weeks or 1 or 2 months. Normally, it take a couple of months, maybe 1 or 2 years before we see a pattern like this, or the price charts like this, right? So in a moving average, so what is a moving average? So basically, based on this price data, all right, we can pull out a moving average for any single stock, all right? We can pull up for any single chart. So a moving average is essentially a line that forms based on the average prices over a period of time. So we got all these prices moving up and down, all right? And based on all these prices, of course, each bar or each price is a day, right? So let's say you're looking at a 20 days moving average. That means over the past 20 days, we get the average closing price, and they form a line. So very simple, it just smooths out that prices, and that's where you get a line. So it kind of like gives you an idea of the trend just by looking at a line, rather than like all the prices moving up and down like what we see over here. So we have like what we call a 20 days moving average. It could be a 50 days, it could be 100 days. Of course, if you're looking at a longer period moving average, like a 200 days moving average, then we are looking at like a 200 days. That means a longer period. That's like almost a year. All right, and this line would be more smooth. It'll be more slow and steady. All right, later we'll pull out that line. But essentially, a moving average is just a line you can pull out, and it's different period, right? So depending on the different period you want, and of course the different period affects how the line will form up as well. The shorter the period, like a 10 days moving average, then you can see that the line will be really close to the prices. It's very time sensitive because it's only like a 10 days period, so it will just follow prices really closely. All right, if it's a longer term period like a 200 days or like 100 days moving average, well, that's where the line will be a bit more smooth out. It'll be more gradual. Any changes will be more gradual, right? So based on this diagram right over here, let's go ahead to draw what we call a 100 days moving average. So that's how it goes to be like that. This is a red line that I draw right over here, right? And it might just come down a little bit, and we might start to see this line start to turn up. So this is what we call like a 100 days moving average, 100 days moving average, like that, right? Something like that. We try to pull out later in the chart, right? But this is a 100 days moving average. So just by drawing this 100 days or pulling out this 100 days moving average, right? As long as prices are below, right? So in this case, right over here, when prices are below the line, so in this case, right, we can see that prices are below this 100 days red line. Of course, this red line is pointing down previously, and I mentioned that it was a bit of a downtrend, right? So prices below this red line, and this line obviously is pointing down, then it is not so good. It is in a downtrend. As I mentioned, you want to be probably not want to think about buying, but think about maybe shorting or getting out, all right? Especially if you're holding on blindly to stocks, okay? And when we do see right over here, like finally prices going back above the red line or going back above the 100 days moving average line, and now this line starts to point up, right? Starts to point up with kind of like prices above it, right? So prices are now above this 100 days moving average red line. Well, that's a good thing. That could kind of like signal a bit of an uptrend just starting to form. So it's just by looking at the 100 days moving average, just a single line by itself, right? And then what we could do is we can pull out another line, right? Another line, and that's what we call the 200 days moving average. So I just look at a few moving averages, the 20 days, the 100 days, and even the 200 days. Both, each three moving averages give me different time periods. A 20 day would be more for short term, 100 days a bit more mid to long term, and a 200 days will be more of a longer term outlook, just to give me an idea of what is happening over the past like 1 year or potentially the next 1 year period. All right, so I can draw what we call a 200 days moving average. Now, same thing, this is a line that goes a little bit slower, all right, a little bit slower. It goes down more gently. You can see it doesn't react that much, it's more gradual, and you can start to point up as well eventually. All right, and this is pretty much how it works, right? So this is what we call a 200 days moving average, something like this, right? A 200 days moving average. So the next thing you can look at just by having these two lines would be the crossover. So right over here, can you see that this 100 days moving average, the red line actually goes above the blue line, right? So the red goes above the blue, 100 days above the 200 days, and both of these lines are pointing up. Well, that could be a sign of a potential reversal in terms of the uptrend starting to form, and this is where you can potentially think about buying or positioning yourselves to ride the upside, right? Just by looking at the moving averages, right? So a moving average strategy kind of like gives us an idea of where is the trend heading to, right? Just by pulling out the moving averages. And as I mentioned, you want to think about buying only in an uptrend, or at least you have found some stability in terms of the prices. All right, so let's just dive into a case study to see how we can pull out these two 100 days moving average and the 200 days moving average line and see what is the trend and how does it actually apply to real life stocks. All right, so let's take a look at this case study on this stock called NVIDIA, all right, stock code NVDA. All right, so as I mentioned, right, when a stock kind of reverses from a downwards to upwards direction, it's not like over a few weeks or like 1 or 2 months. It can take like 6 months to 8 months or maybe more than a year as well. All right, and this is something like what we have drawn in the diagram right up here in terms of the movement of the chart up and down, up and down. Or of course, we pull out that two moving averages, the red line, 100 days moving average, and the blue line, which is the 200 days moving average, right? But essentially you can see that the diagram looks something like this, right? Like NVIDIA, right? It was a bit of a downtrend, it consolidated, and now it is starting to move up. So let's just pull out the moving average. So you can pull out the 100 days moving average line right here, right? So this is the red line. So normally for my 100 days, I use red color just to keep it consistent and the same, right? So that is the 100 days moving average. Of course, we can pull out the 200 days moving average right over here, right? So you can see just by looking at the moving averages, right, in terms of the crossover or in terms of whether the moving averages are pointing up or down, right? You can see that somewhere around like beginning of 2022, in fact somewhere around here, right, we can see that the 100 days moving average, the red line, actually crossed down and went below that blue line, and both of these lines were starting to point down. Look at it, it was pretty much just pointing down, and of course prices were below it. So not good, not good. It shows a little bit of weakness, it shows a bit of a downtrend, and that's where you want to be cautious. I mean, especially if you're holding on to stocks like this, or maybe even thinking to ride the downside by taking short positions, all right, and not really thinking about buying, all right, because it's what we call a bit of a downtrend when we see things like this in terms of the moving averages cross over downwards bearishly right over here, all right. And somewhere around the beginning of 2023, you can see that the moving average, right, started to turn up. So this red line, the 100 days moving average, as I mentioned, started to go down and down, then flatten, and it started to point up, and eventually right over here, right, we saw the bullish crossover, all right, in terms of the 100 days moving average going back above the blue line, the 200 days moving average. So that is a sign of the trend, right, potentially turning from down, which is what we saw since like early 2022, to potentially moving up. And that's where you want to think about getting in, right, positioning yourself to ride the upside. So I've covered this stock a few times, analyzed it from some of my subscribers as well, all right, and I would say that it has pretty much turned into an uptrend, not just like last week or last month, but since the beginning of the year. And in fact, before this line actually crossed over, you can see that in like maybe beginning of the year, right over here, like for example, right over here, you can see as it starts to move up, as this 100 days moving average line starts to move up. So you want the red line to cross above the blue line, but before it crosses, it needs to get closer and closer and closer together, like what we see over here. This was somewhere in February. So you can see the red line starts to go closer and closer together. It hasn't crossed yet, but it's getting closer and closer together, and eventually, bam, all right, right over here, somewhere around like end of Feb, the red line went above the blue line. Well, that is a confirmation. But even before it crossed above, right, there could be some sign of strength already, because this red line, like right over here, it is already starting to point up, and the blue line is still flattening out, but eventually, you know, if it holds above certain support levels, this red line will eventually cross back above the blue line, and that would turn into what we call an uptrend. And this has been what has played out, right? We cross above, and you can see the red line started to point up above the blue, and both of these lines starts to point up all the way until now. So this is what we call a bit of an uptrend, and as it happens, right, a few months back, early of 2023, that's where you could potentially think about, positioning yourselves to ride the reversal, and that's where you want to focus on buying, all right, not about buying over here, because if you buy over here, it's a downtrend. You buy at 280, you go to 220, you go to like 180, you go to 160, 150, so you never know how low it can go, right? So you don't just buy when it goes down and down. In fact, you want to only think about buying when there are some stability, there's some very good support being found, and obviously if there are some signs of the trend turning up, like what we see over here, or maybe starting to turn up like what we see over here before the moving average actually cross above one another. All right, so this is just by using moving average. It guides us on the trend, it affirms the trend, and gives us a better understanding of what should we do. Should we think about buying or selling, and what should we do in terms of the uptrend, what should we do in terms of the downtrend as well. All right, so let's take a look at another case study to see how we can act on these moving averages again. Okay, so this is Google Alphabet GOOGL stock code, and you can see that in the past 2 years, right, we have been pretty much in a very, very firm uptrend, and then we turned down just by looking at the same 100 days moving average, and 200 days moving average blue line. So very strong uptrend since like, after COVID 2020, 2021. You can see prices really just swinging up, down, swing up, down, swing up. So each time it swings up, it goes even higher, swing down, swing up, all right, and it goes higher. We form higher lows, higher highs. That's a good thing. That's a very firm trend in terms of the upwards direction. All right, and of course beginning of 2022, somewhere around there, we saw weakness coming in many of those tech stocks, and of course Alphabet also got hit as well, and the trend started to turn down. Right over here you can see we started to consolidate. All right, found a bit of a support right here that was around that 125 level. Right, obviously we broke now the support, and the trend actually started to turn down. So that's the first sign of weakness, whereby we break a key support. And when we break a key support with the moving averages right over here, so right over here you can see that the 100 days red line actually turned down below the blue line. So when this happened and we break a key support, well, you want to be careful, because that is where a potential change in trend can happen in terms of the upwards direction, like we've seen since 2020 all the way to end of 2021. Now, beginning of 2022, when we see this, there could be a sign of a trend reversal from up to down. So if you're holding on to it, you have rode the entire upside, great. You want to lock in some profits, you want to get out, you want to reduce some exposure, because that is where the trend can actually hit lower and lower. And actually that's what it did, right? That's what it did since like last year. We've hit it lower and lower, and let's see where we are right now. All right, you can see that the moving averages, the 100 days moving average line, all right, same thing like what we have drawn, right? This is pretty much what's happening right now. So it's like right over here. So the red line pointing down, prices below it. Of course, the blue line is going down as well, prices below it. So it looks pretty much quite similar. Would you agree? All right, somewhere this portion right here on the left section, all right, it looks something like this. It looks something like this right over here. So red line down, blue line down, prices below it. All right, and over the past few months, this is what we are seeing right now. So I'm not talking too much about entry and exit or some of like the more advanced stuff like support and resistance and all that, but we just want to focus on moving averages, right? Just by looking at the moving averages in terms of the trend reversal. Is it happening right now? So look at this right now. So previously we covered like NVIDIA, whereby the red line, 100 days moving average, has actually crossed above the blue line, and of course the prices started to move up, right? In fact, even before crossing above, there were already some signs of strength. But right now, this is Alphabet, right? GOOGL, and you can see that it is happening right now, right? Happening right now. You can see that the moving averages, the red line, all right, maybe just like 2 months back, right over here, the red line is starting to slope up, right? Starting to slope up. All right, the blue line is kind of like this flattening out. It's not really pointing down, it's starting to flatten out. Great. And let's just push forward a little bit more. You can see the red line slowly turning up as well. All right, and when this happens, there is already signs of strength, because we might have found a higher support. In this case, probably the $100 will be a higher support. So as we hold above a higher support level, like in this case the 100, and these moving averages all start to turn up, like the 100 days turning up, hasn't crossed above yet, hasn't crossed above the blue line, the 200 days moving average. But when we see like a higher support being found, I would say more or less eventually, if we hold above the higher support, this red line, this 100 days moving average will eventually cross above the blue line. All right, and that's what we call a bullish crossover. Then that would be a good thing in terms of a trend reversal confirmation right over here. So I just kind of like saw this chart, and you can see that as I'm talking right now, over the past like 1-2 days, I would say that the 100 days moving average have finally just touched the 200 days moving average blue line. So as long as we stay above that 100 or maybe even the 120, I would say that this will continue to play out eventually. All right, let me just try to predict this. All right, eventually I would say that this red line, all right, this red line right over here, let me just draw it for you, it will continue to point up, right? It will continue to point up right over here. All right, and that's pretty much how it will be. All right, as long as we stay above the high support and the blue line, right? The blue line would be something like this. It will be open. Okay, this is red in color, right? And let's go on to draw another blue line. So the blue line will be something like this. It will flatten out, all right, flatten out, and eventually will start to point up as well. So let me just change this to blue in color. Does it make sense? All right, this is pretty much what can happen as long as we stay above the support. All right, and both of these moving averages start to point up, exactly like what I've drawn in the diagram right over here. Can you see? All right, this is what I've drawn. So right now we are just like here. All right, we're just here. All right, so the red line has just crossed above the blue line, the 200 days moving average, but we need more time to play out. And as long as the red goes up, all right, the blue starts to flatten, eventually point up as well. Right over here, like what I projected, then great. That is where, you know, potentially the trend can start to turn up, right? In fact, it has really turned up right now. It can see prices pushing even higher. We might start to attempt to find a new high, a new recent high, attempting to even retrace or rebound back to the previous high that we have seen in 2021, maybe all the way to like 150, 140. That could be potentially the next upside targets. Does it make sense? All right, just by looking at the moving averages, you can get the trend. Alright, so I hope you have found some value in this video, and I've dived deep enough into how you look at moving averages. So you found this video useful, you got some value out of it. I would appreciate you can give me a like. That will really help out the channel, and thank you so much for doing it. And of course, smash the subscribe button as well so that you will not miss out on any videos like this. So Joey here, thank you so much for watching. And if you want to have some of our ideas that we share by WhatsApp daily to clients of mine in Philip Securities faster, right? That's where we kind of like, you know, send out ideas by WhatsApp daily, right, to clients of mine in Philip. Click on the link around this video. I'll probably put the link around this video, or you can download my trend trading report as well to find out a bit more. But essentially, as a client, that's where you get some of our ideas much faster. So if you are trading online on your own with like a platform or a broker that pretty much does nothing, or you don't get any ideas or service or videos or WhatsApp or training or anything like that, you don't even know who your broker is, then you might want to come over as a client. Click on the link, all right, around this video. I'll put the link below, and I look forward to me and my team serving you. And that's where you can get some of our ideas much faster, and you can watch these potential stocks like this as well. So Joey here, thank you so much for watching. Take care.